Now, just continue, if we can just talk a little about the economy a little bit more. We're seeing this export-oriented economy. We got institutions like the Taiwan Central Bank lowering their full-year GDP forecast. What is your expectation for the full-year performance, and why is there these downgrades?
Sure. Taiwan, as you know, is a big export market for tech. So technology demand globally has a lot of impact for the Taiwan export data. For the last 2 years, there was very strong PC demand from Taiwan globally. Because of COVID, people are forced to work and learn, study from home. So we are seeing very strong PC, smartphone demand shipments for the last 2 years. Unfortunately, with all the new products people have already, we are not going to see a strong replacement demand. That's why we don't expect to see strong PC and phone demand for the next 2 years. That's negative for Taiwan. On the other hand, the high-end semiconductors are still doing well. So the area like AI, like robotics, like electric vehicle, like servers, data centers, those areas still need high-end semiconductor PC and high-end semiconductors. So we're seeing some parts demand strong, some parts not so strong. That's why we see a mixed demand from Taiwan. That's why the Taiwan government lowered the expectation for the rest of the year. Of course, we all know that the biggest concern is still inflation. Given high inflation, we are seeing central banks around the world increasing the interest rate. There's a term called crowd-out effect. That means that when interest rates are higher, people are forced to spend money on the areas they have to, such as rent, such as food, such as gasoline for the car. So they have less disposable income for other areas. So that's the concern that we are seeing lower demand from other disposable areas like PCs. For example, if you have no money to eat, you're not going to buy new PCs. So that's why I think that until we see inflation under control, we're going to see concern.